Hi, this is Allison Hawkins, and I'm with the Alliance for Charitable Reform, and I'm with Steve Woolf, and Steve Woolf is the Senior Tax Policy Counsel at the Jewish Federation of North America. And being a Senior Tax Policy Counsel, he knows a whole lot more about tax policy than I do. So today we're going to be talking about the Buffett rule. The president has pushed for the Buffett rule in many pieces of legislation, but this year he actually included the Buffett rule as part of his tax policy in the budget. And it was a little bit different than how it's been proposed before. It's very complicated, and so Steve is going to help explain how the Buffett rule is going to work in the president's budget proposal. So Steve, we've talked about the implications of the Buffett rule.
Mm-hmm.
It's a 30% minimum tax rate on anybody making over $1 million. How would it work when somebody's trying to calculate their taxes?
Allison, first of all, thanks for having me. And I'll try to explain a very complicated provision that would be added in the tax code. This would really be a third separate tax calculation for taxpayers. You now have your regular tax calculation. Mm-hmm. You now also have an alternative minimum tax calculation. The Buffett rule, or as the president characterizes it, the fair share tax, is yet a third tax calculation that a taxpayer or a donor would have to go through to figure out what their tax liability is and to really see what the benefit of their gift might be.
This sounds complicated and an accountant's dream.
Yeah, it probably is an accountant's full employment act because what you need to do is, after you've done your first two calculations of regular tax and AMT, is then go back and look at start with your adjusted gross income. Mm-hmm. And then sort of the good news of the Buffett rule or the fair share tax rule is that it does allow really only one tax preference or tax deduction item, and that's the charitable contribution.
Okay.
So it's a recognition, I think, by the White House of the importance of charitable giving by singling this out as
sure.
a type of incentive that should be in the tax code.
Right.
So that's the good news.
Right. The deduction is different.
But the bad news is, again, anytime you have an alternative tax calculation, it adds to complexity. It sort of takes away from transparency. It really makes it difficult or almost impossible for a donor, for a charity, for plan givers to sit down and really figure out what the ultimate benefit of the gift is to the donor and how the donor can structure the gift so more dollars flow to the charity. So that really is, I think, probably the most sort of distressing part of the Buffett rule, if you will, because again, it's going to require more calculations, more administrative work, and although on one hand you might say it's quite simple because there's only one tax preference item, it's going to make it very, very difficult for the charitable community to figure out what the value of a gift is.
Right, because you have to do all these different calculations.
Exactly.
Now, in the president's budget, and he's proposed this many, many times, there's a 28% cap on itemized deductions, and that includes a charitable deduction. Under the Buffett rule, the charitable deduction is carved out, so you would get no other deductions except for the charitable deduction, but that is also capped at 28%, right?
Right, and that's sort of a new wrinkle this time around. When the Buffett rule was first talked about over the last several years, both at the White House and on Capitol Hill, it was tying the tax deduction for charitable contributions to the tax rate of 30%. So if you're going to be taxed at a minimum of 30% for your income above $1 million, you'd also get a 30% deduction. This time, the president would limit the value of the charitable contribution to 28%. And so you would actually do the calculation and then figure out what that value would be, and then that amount is actually a tax credit against the Buffett rule tax. So
it's designed as a credit,
right? Even though it's based on a limitation that's based on really the amount of your itemized deductions.
Right, on a deduction scale.
For charitable contributions. So the bottom line is, this makes it more difficult. And I think probably most importantly, and maybe most troubling for many of us in the charitable sector, is you have what we call decoupling. You've decoupled the tax rate of the tax imposed on a donor who gives away something in order to get a deduction.
Which in this case would be 30%.
Exactly. And you only get a deduction or a credit valued at 28%. And even though it's only a 2% haircut, if you will, this would be the first time that there is a decoupling, and that's a very, very troubling trend.
Right, that's a dangerous precedent to
Exactly.
set. Who's to say that next year, when we need more revenue, we, drop that that carve out to 20%.
Right.
And then we've got P's, which is a whole other level
Right.
of complication, which we won't get into here.
You don't want to go in that. That's another haircut, which actually, and actually, it's a good point because the 28% deduction, which gives you your credit for Buffett, also takes into account the P's limitation. So there is a further haircut as well. And I would also say that there are other provisions in the tax code where Congress and White Houses in the past have said, okay, we'll limit something at 80%, then they've gone down to 50%,
Right.
then they've gone to 20%. So this is a slippery slope.
Right.
And something I think that the charitable community really needs to keep an eye on, really push back hard against.
Well, this is very interesting and very complicated. I'm glad I'm not an accountant.
Well, it's almost April 15th, and accountants, I think, need something more for them to look forward to, so I think this would be something. But quite frankly, I think this is a provision that's going to get really looked at critically on Capitol Hill. There are some proponents of a Buffett rule on Capitol Hill, but they're in the minority right now. Yeah. And I think as long as the sector stays together to fight against these types of proposals, I think we'll be in good stead.
Yeah. Well, thanks for joining us. We'll, I'm sure, be talking more about this topic, and we'll talk to you soon.
My pleasure.
Thank you.